Good morning from Paradise Surfers. We got a big one today. We are joined with the man, the myth, the legend, the brain behind Frontier Fund, the hedge fund-like trading outfit that has been generating us Chads in the crypto paradise DAO 15% returns a month, 180% annually, and I think it's poised to actually outperform in this next round that's coming up. So we got Taha here. We're going to dig into the ins, the outs. What's Frontier Fund? How's it doing what it's doing? What's the future of it? And of course, how to get into round two, which is coming very soon. So yeah, pleased to have you on, man. Before we get into the details of Frontier Fund, just quick 10, 15, 20 seconds on your background in crypto, and then we'll start talking markets.
Perfect. Howdy, everyone. Thanks for having me here, Amaru and Crypto Hitman. It's always a pleasure to be with the Paradise crew. My name is Taha. I'm also known as the Brown Cowboy. That's who you see me as on Telegram. Been in crypto since about 2016. Actually gave a TED talk in 2017 about some of the technologies I was working on. This was before the NFT cycle. Met Ian, the crew over here, through some of the previous ventures. Have been in the community for a while. One thing that I always felt frustrated with is the liquidity of capital. Like we want to put in money. I remember in the pre-sale days of 2020 as well. You want to put in some money and you're like, why can I only put in $200? Why can I only put in $300? When you're trying to 10x it, 210xing is 2K. I'm like, can I put in $3,000 and 10x that to 30K? The problem is even if you get those kind of entries in pre-sales in a lot of these early low market cap coins, then the liquidity isn't available for you to take that 30K, 40K, 50K, 100K out without wrecking the project. So what I've always looked for is opportunity where there is sufficient liquidity to make meaningful gains. And that's what the Frontier Fund is solving the problem. There's still opportunity with pre-sale market, don't get me wrong. A lot of gains to be made. But if you're looking for higher capital deployments in the multiple 5 or even in some cases 6-figure ranges, we do tremendous amounts of volume. Just in the first segment of our round, we've done over $300 million in volume. And we do it over a limited amount of trades. We don't do hyper trading. So we made 95 bets over a 60-day period, which were filled through a couple of thousand orders through the technologies that we utilize and the platforms we use. And then we did all of that with an above 93% win rate. So all of this added up to us having the 15% monthly return. Our target is 60%. So at first we were beating our target. We kind of retracted a little bit with catastrophic events, and then we started to circle back up. But that's a little bit I want to speak to. I'm sure we'll cover a lot more. But the vision of Frontier Fund is to provide high liquid returns. And these are not paper returns. When the people get their payouts, this is cash. This is not just like take a screenshot that I have this much money. The returns are actually USDC stablecoin returns that are being sent to you. So this is another big difference, Amaru. I'm sure you can speak to that as well.
Yeah, man. Thank you for that introduction there. I don't know, Nick, if you had any immediate thoughts on that. But I guess the first question, so you kind of went into, I guess, why you created, and I completely agree. That is a big problem, right? You see all these influencers on crypto Twitter or whatever. Oh, 10x turn there, 100x turn there. We're guilty of as anyone. But oftentimes it's unrealized gains. And then, like you said, when you go to take it out, you can't. There isn't liquidity there. So solving that problem is a significant thing. But I just want to back up real quick. So for the layperson who isn't in the trenches with us, hasn't been hearing us talk about Frontier Fund ad nauseum, what is Frontier Fund in like a quick sort of 10, 15-second pitch, and then we can get to some of the details.
So Frontier Fund is a high yield generating, relatively low risk because we only deploy 50% of our margin at any time, trading platform, right? So what happens is a custodial platform. So any participant has the opportunity to contribute to the fund. We do it only in segment rounds. Once you contribute to the fund, our traders, it's myself and Asad, so it's only two of us that do the trading, utilizing a lot of tools. We continue to trade, and then we provide yields on those returns. Now, you may say, why should I trust these two random guys on this return? And that's a valid question. That's where we provide our data and what we've done historically. So we've consistently provided, on average, anywhere between 1% to 2% daily returns. And that adds up over time. And then we provide those profits and we give you distribution opportunities at different checkpoints. So it's a way for you, if you're looking for a couple of $100, $200, $300, $400, $500,000 investment returns, there are other opportunities. If you're looking for deployment of capital, like you want to put in 5K, try to see if you can turn it into 10K, put in 5K, try to see if you can turn it into 20K. Those things over time are more possible with Frontier Fund. And people that deploy larger amounts of capital, 30, 40, 50K, obviously see larger returns over time. So it's a trading platform that provides yield through minuscule but consistent trading yields generated every single day.
And I think that goes to, how can people get into it? I know to start there was kind of a dummy round where you're using your own funds, and Crypto Amaru and some others got in there. And then the Frontier Fund, or at least the first round, was you needed 200,000 surf or more to get access. Now for the second round, due to the success and the limited amount of spots, you only can have so many people in there, only can have so many dollars and investors. It's 400,000 surf or more gets you to a tier in which you can invest into the Frontier Fund. Obviously, there's a lot of demand for that. You can get the contract address for the surf token. It's pinned in the Crypto Paradise Twitter, and then hopefully you can learn more about the Frontier Fund from watching our live shows and why we're so bullish on it. But I guess, yeah, in my eyes, the easiest way to put it is it's just an investment fund or a hedge fund in which you can give a portion of your portfolio, 5,000, 10,000 or more. Everybody's got their own size. And you let AI, algorithmic trading, and these traders trade it on your behalf, low leverage. And I guess that's what I want to know the question of. What is the trading strategy? Are you only trading certain assets and certain leverage parameters? Like, what exactly is being traded? Are you trading everything in crypto?
Yeah, that's a great question. And I'll speak to your demand and I'll get to trading in a second. The demand is incredibly high, and that's why we have to limit the number. Like, almost, I think, except for one individual, every single person from Pioneer Round has already gone into the bridge round. So the next raise that we are planning is already halfway full before we've even announced it. So this is kind of like the segment they're going to deal with once we do announce this, which is why it's taking a little bit longer because I'm trying to determine, how much room we'll have available. So we're going to announce the details of the raise. It is going to be a bit more exclusive because we need to manage the amount of administrative work that we want to be focused on and spend most of the time trading. Now, what do we do when we are trading? So we look for highly liquid assets because of the size of our orders, right? Like some of our orders can be over 1.8 to $2 million, $2.8 million that are spread over different fills. We do utilize TWAPs, which is a time-weighted average price order, sometimes to mimic them up so that we don't become prey to the hunters out there that are hunting liquidity. They don't see our larger order and know when to come liquidate us. And so the assets that we go after that can handle that kind of size without really blinking is primarily going to be BTC. We go to Sol next. ETH wasn't really behaving in a predictable pattern. We're starting to look into ETH, but we are sticking with BTC and Sol. And then in some cases, we'll go to other assets and deploy like a very small 5, 10K, 15K in capital out of the total portfolio with a limited amount of leverage where we think that this can like 2, 3, 4x. And we don't really need a lot of liquidity available. So limited amount of capital, primarily staying with the core assets, BTC and Sol, and adding some others, which can include ETH, include SUI, XRP, and in some cases, the lower high risk ones would be like wine, and that's kind of where we stand off. But just to give you an example, over the last 6 months, because we've done this prior as well, I think we would have less than 1% of our trading in any asset other than BTC and Sol. Most of the trading is happening in BTC and Sol.
So I want to get into how you guys evaluate whether to make a trade, when to make a trade. Is it purely chart analysis, or is it a combination of that and macro sort of, news related analysis? Like, how are you guys making these trades? What's leading to a decision to whether to long something or short?
Yeah, this has been one of the things that has been interesting to manage with other people now being in the fund and looking for updates. Good trading, in our experience, is 99% waiting for the right opportunity and 1% execution. So 99% of the time, you're not just sitting on your thumbs waiting and hoping and praying for the right opportunity. You're actually analyzing all of the things that are happening. This includes your technical analysis, looking at the chart, looking at your relative strength index with the RSI, which is just one of the indicators. A lot of traders only trade on the RSI index, which basically tells you when an asset is oversold or overbought, so you want to short or long it. But the problem with relying on single indicators, like just an RSI index kind of trading, is that you miss out on the greater context. You miss out on macro indicators, what's happening with FOMC meetings, what's happening with the jobs report, what's happening with, tariffs. So you need to kind of keep track of the news cycle, which is another thing that we do. So we have a lot of tools, including X Radar, multiple social media tracking and news tracking tools that we utilize for that. We're tapped into certain groups that share alpha that may not be easily available to the public just yet, because of some of our investments and connections through programs like World Liberty 5. So we have some connects that we try to get some information early on so we can forecast. It's not perfect. And then the second thing that you have to account for is a lot of people kind of feel this, but at our level and the kind of work we do, we can see it happen, is the market manipulation that happens with exchanges and market makers. So this is not a theory. Like we see it happen because we have tools that can show us the same things that the market makers and exchanges are looking at. So these are liquidation levels. So most of the trading does not happen on spot. Most of the volume is happening, other than obviously the institutional aspects that are coming in. But most of the regular trading volume is occurring through these leveraged long and short plays. And exchanges, when let's say you have $100,000 that you're deploying and you're doing 10x leverage. So that means you're borrowing, in that case, $900,000 from the exchange or the platform in order to deploy that total $1 million. 100,000 you provided and 900,000 you provided. Let's say you went in a long. So the exchange has loaned you that capital. Now let's say that 100 people have done that. So that's, obviously at that point, 900, you've got almost $100 million, because $1 million has been loaned out. $100 million has been deployed, and out of which 900 million has been loaned out by the exchange. So what the exchange is trying to do is, they know that you got in at a certain price and your stop loss is at a certain price. They're trying to come liquidate you, driving the price down so they can free up that $900 million in capital, and then they can deploy it themselves to buy the dip and then drive the price up, and then they can liquidate the short. So this is how they keep driving the price up and down. So we have tools that track the levels that exchanges hunt. And then, so we kind of wait, and they trick traders because traders are only looking at RSI. So this is when the RSI is oversold, you think, okay, the dip is done. And so a bunch of people go in and do a long, and there's massive longs built up with stop losses. And that's when exchanges go even harder. And I actually have an example of this. If you guys want to give me a second, I can show you on my screen a concrete example of how this goes wrong. Is that okay?
Okay, feel free to share your screen. I'm
Okay.
sure the viewers are highly interested in it. When folks say, as you're pulling it up, when folks say, we need regulations, sometimes I kind of roll my eyes, but you know what? Maybe we do need regulations. If exchanges are manipulating and liquidating their own customers, I don't know if that's a prevalent thing in the traditional markets, but that seems to me like it shouldn't be allowed. But anyway, if you don't mind, sharing your screen here, we can talk about your.
Let me show this one example. I'm going to try to zoom into some of these things because I think it's a lot of information that we're looking at on the chart. So give me 1 second. That way it becomes a little bit easier to navigate. Okay, so I'm going to show you this point, which is just like yesterday, actually. So at this point, the price of this asset was sitting at, so this is SOL that we're talking about. And so it was sitting at 187.38 right here, where my mouse is pointing at. And this is what a lot of traders do. They look at this RSI. The RSI specifically at that time was sitting, you guys can still see my screen, right? I just moved something here. Okay, so the RSI was sitting at about 30, which typically indicates that the asset is oversold and you can, go in for a long position. And in fact, I don't know if you can see this indicator here, RSI LE, RSI long entry. The tools even are indicating that this is a good point for a long entry. Can you see that, the RSI LE right here?
Yeah.
Okay. So this is where a lot of people go in, and you can see right after what happens. So if you got an entry at 187.35, look at what's happening beyond that. And so what the typical trader, especially a lot of folks that are trying to, learn trading and figure this out, it took us a long time to get a handle on all these things as well. That's what we did over the last couple of years to make sure that we can get a good handle. What typical trader will get an entry at 187.30, and you're still not even break even with that target. Where we ended up getting an entry yesterday on this 30K trade that I showed you was at 182.30. So how did we know that even though the RSI was low, how did we know that we should wait? So we have other mechanisms outside of this that allow us to track certain things. So if you see these markings, the yellow bubbles, the red bubbles, the blue bubbles, they're much smaller. They're giving us an indication of, let me go back to the screen. They're giving us an indication of the 100x, 50x, and 25x longs that are in place across different exchanges. Binance, Coinbase, it has started this as well now. Hyperliquid itself, many other exchanges, and we're looking at what exchanges are targeting to liquidate these traders. And then so based on that, we know that even though the market is oversold, they're likely going to go after more. Likely Bitcoin is going to go to 116 range, and then it's going to bounce back off. So we're able to wait for those and improve our entries. The downside, of course, of that is that you probably noticed over the last couple of weeks, we haven't been able to provide as frequent daily updates because in some cases, they're waiting 2 to 3 days to fully flush those targets out. So this is sort of, this is just one spoke of the strategy, Amaru. There's a lot more, and we call all of this framework the Signal Scout framework. So we have, macro news indicators, technical indicators, manipulation indicators, and other opportunity factors that we track to actually then make a bet and execute the trade. So most of our time is spent getting all these indicators, getting all this information, and then finally hitting the execute on the button.
And it looks like it's working. I mean, 1.55% daily returns on the investment fund with a target of 2%. And like you said, outside a couple big news irregularities like the Israel-Iran bombing that kind of came out of nowhere, you guys were on pace at like 3% daily yield. So, exciting times ahead. Even if you stay at 1.55%, that's 15%, 15.5% for the investor on a monthly basis, which you can compound at the 30-day mark. You can cash it out as monthly income. You can kind of do whatever you want to do as long as you guys keep having success and keep doing new rounds like this round 2 that's coming out very soon. Do you have a timeline on when people need to get prepared to try to get into round 2? When should they buy their 400,000 surf to make sure they have at least eligibility for round 2? Like, what's that timeline look like?
Yeah, no, that's a great question. So this week we've kind of taken a tapered approach to kind of rejuvenate because we need that as well. Myself and Asad, it's only two of us that, at some cases we're up 24 hours in different shifts. So Asad took a little break with, went out with some friends and stuff to get his brain back on track. I'm going to be going away for a few days coming up. But before going away, I'm going to open the round and then we slow down the trading because only half of the shifts are available. So for you to be prepared, you want to get your 400,000 surf ready today. And we are going to be releasing the pitch deck and the information and the stats later this week. The 1.55% is for a segment, by the way, of the previous round. We're going to show the cumulative one, which will be, I think, about 1.05%. But we're also going to show you the high and low markers because at the high point, we were near 10%, right? So just so you can understand that over time, the yield ends up being a lot more lucrative. And I think people in the bridge round are seeing that now. And then the raise is expected to complete in the first week of August. If needed, it may go into the second week of August, but it will not go any further than about 14th of August because we won't want to start trading at that point. So this is your time frame. You want to, the earlier people that put in the capital, we may look at opportunities depending on the time frame of the raise to give them an into the trading rounds and yield early on. But if it ends up becoming too much of an administrative work, we'll just do one round closing. So again, to summarize, get your 400,000 surf ready now. Expect the pitch decks to be circulated, including the contribution forms by the end of this week, which would be around August 1st, August 2nd. And then the raise to be expected to be completed in the first week of August, just going into the second week to start trading. The amount of raise that we're going to be looking for is we're going to look to raise a total of $1 million in capital. We already have about $500,000 of that committed, and that's going to continue to increase because the bridge round participants are already making money. And then if there's an overage, we'll look into entertaining that. In terms of minimums, previously we had a $10,000 minimum. We are reducing that now to about a $3,500 minimum, so a lot more people can have an opportunity to participate. And the maximum is increasing to $100,000 in capital, with the exception of the Pioneer Round participants. They have the opportunity to put their full capital. And once you get into a round, you get those kind of perks, like the limits on the max amount go away because we know that you can handle the risk profile. I do want to make a disclaimer about risk profile for everyone as well. The way we see it is that this is trading, this is investment. So you need to have a crypto trading investment related risk profile, which if you're investing in pre-sales, you already have that risk profile, but you need to understand that with crypto, anything can happen. Bitcoin is, sitting at 117K today. It was at 125 a few days ago, 123, 125. It's back at 116. These things can happen. But what's unlikely to happen with this trading is, coins going to zero, which happens in pre-sale in some cases over time because they have to deliver a product. However, there is a liquidation risk. We do manage that risk by only deploying 50% of the capital. And after a few days of being in the round, roughly about a week or two, we've made enough profit that typically the amount of money you can lose is only the profit you've made. In fact, we had one such instance in round one, where Elon Musk and Trump started fighting. We had already made upwards of about $700,000 in total capital. And this fight came out of nowhere. It was unexpected. And we had to take a loss, but the loss was only on profit. And people were still $160,000 in profit after taking the loss. And in the next 2 weeks, we made all of that back up and provided that yield. So the risk is there. It's not just all sunshine and roses. You need to understand the risk is there. In my opinion, it's a lot less than pre-sale because you're not waiting on a project to deliver technology or anything like that. But I'm sure Amaru and Crypto Hitman, you guys can share your perspective on that. I hope I shared enough info about the raise and stuff there.
Oh yeah, man, that was great, super helpful. You heard it here, guys. You have really this is the time to gather your forms on Surf and be ready to contribute. Forms will be circulated soon within the Crypto Paradise DAO group. So yeah, great stuff, man. I do want to just circle back to the chart that you pull up. You don't have to pull it up again, but I think a lot of people, I know, certainly within the Pioneer round, maybe they don't fully understand the level of difficulty involved in this, the level of commitment and study that led up to this, and then the execution. I don't know. I just feel that there's a lot. It sort of like makes me scratch my head. Like, who's that guy out there who has a full-time job, maybe a family, and then thinks he can go up against guys, first of all, like Ta and the Frontier Fund, but then who think they can go up against Binance and win in leverage trading? So for me, I don't even touch trading. Let the professionals handle it. I'll stay in the trenches. I'll try to find those 10x returns, things of that nature on the memes or the pre-sales or what have you. But this leverage trading stuff, this is the professionals there. The sharks are there looking to liquidate you and take your money. So yeah, for those who think this stuff is easy and yeah, sure, I'll just walk in the casino and bet against the best of them. Like, no, dude, it's not going to work out for you. So there's not really a question there. It's just more of a, this stuff is hard. And for those who think they can do it better than the professionals and better than the people at Binance themselves, I think you got a rude awakening. So easier to hand it off to someone like Brown Cowboy and his team. Of course, there is risk. And there's one thing I do want to say about that and then the transparency. Or I guess a question, I should say. So there's people obviously in Pioneer round. There's going to be joining the secondary round. How does the transparency work? How does the communications work? And I suppose anything from like round one that you learn from that, and then anything you'll be changing for round two.
Yeah, that's great. So we were providing daily updates in round one for, I would say, 70% of round. And then because of the manipulation timeframes that changed, because that about 50% of our trading is affected by market makers and exchange manipulation. So when that started to go up, we were not able to provide daily updates. Our updates went to about 72 hours at a time. So one thing we're learning is that we need to commit to more status updates and giving an indication to people that it may not be a daily update because we may not take a trade every day. It just doesn't make sense to go in and get wrecked by the exchanges just because you need to provide an update. So what we're going to start to provide is more clarity on what we're seeing in the market and telling people what we're waiting for in order to get an entry. Instead of just looking to see if we can get a couple of $1,000 gains every single day. And the benefit of that is that if I had made an entry every single day last couple of days, I maybe would have made 6, 7, 8K on the capital. But because I waited for the entry, I was able to generate 30K on the capital in 3 days, which is far more significant of a yield. So this is one thing that we're going to be a lot more clear about. The communication pattern remains the same. Anytime somebody asks for an update, we typically, it's not an active customer service scenario, but within that day, there's a response to that question. It doesn't really go beyond that day. And that's an understanding we provided to everybody that it's only 2 people and our job primarily is to trade. So we want to reduce and minimize as many of the customer care questions. So if you're looking that you can send a message and get an answer right away, this is not the fund for you. But if you're a person that can send a question and expect the answer within that day, that is what we can commit to, and we have done pretty well with that. And everybody has been quite happy with our pace of answers because we've set that expectation that we want to spend 99% of the time actually doing the trading and generating money for you instead of going back and forth answering every single question about, hey, what do you think about this trade? What do you think about that trade? So those are some things people should know. I think everybody has been happy with the transparency level. After we've completed the trading, we also share every single trade, every single fill report down to the decimal. You can track this. You can look at our win rate of 93%. It's not just a claim. You can actually go to the dashboard and see every single trade that we did. and how out of 95 bets, 93 of them won out. I can't remember the exact numbers, but it's definitely in that range. So all of this is available. It is not available while we're actively trading. We did that for a period of time, but that becomes a problem for us because, to be really transparent, it provides a level of performance anxiety because it's like someone is watching your trade now, and it becomes a problem because then we start getting questions coming in. When are you going to exit? When are you going to do this? When are you going to do that? And it was a horrible situation for us because then we had to start answering those questions instead of focusing on all the factors when you look at a trade. So live access is not going to be available, but you get updates after every trade cycle is closed, which is typically either every day or every about 24 to 72 hours if the trade is being held a little bit longer. Does that sound like I covered about everything there?
Yeah, that's good. I think even if you just do daily what's going in your brain and just put that on text, I think that's powerful. And yeah, the other thing with trade anxiety, that's a very real thing. I have the private group and we do more macro, longer term trades on various assets. And when people start questioning, well, oh, there's a green candle, should we sell now? It makes you like double guess your strategy and when you're supposed to exit. And you're like, okay, I'm just hitting sell because I'm gonna take some profits and take a win, rather than getting all the meat off the bone because you're in a position based off your strategy. So I think that's really important. And then providing the insights and the results of those trades after they happen keeps everybody's morale up, keeps the transparency up. But now you don't have people questioning or trying to copy your trade or leaking that trade out to the general public that maybe people want to go after that and try to liquidate.
Yeah, I think it's really important to stay focused with the segments of information that are core indicators. And when you have other people providing input, that becomes an indicator and it affects your overall strategy. And that's why we prefer to execute the trades and then provide the update rather than having an active involvement. Because this has been working for us, has been working for us since October of last year. And then we've done, our official beta round. I think it was around March that we started off with a Maru. And then, of course, Pioneer round, it worked out well. And we think it's going to work out well in the next round, which, by the way, is going to be called the Trailblazers Round. So, any of your Trailblazers who are looking forward to join the frontier, this is your opportunity. Get your surf ready. And I think it's going to be a fun ride. It's actually going to be, I think, a lot more fun in the coming months because I think the uncertainty about what was going to happen with the tariffs, what was not going to happen with the tariffs, all of that is past us. Pioneer round participants kind of had to live through that. I think Trailblazer round folks are going to ride the general volatility that is going to come from institutional capital, SOL ETF adoptions, a lot more things like that are going to be on the plate. So we're gonna have a really fun and interesting round, and I think it'll fall right into our long-term plans as to what we're trying to do with the fund and the future opportunities we're looking to bring to all the participants as well.
Yeah, well, I think I'll get to those questions in a moment in terms of your long-term goals with this. But I do want to give a shout out to everyone who's in the Pioneer round. First of all, you guys all took a risk. I mean, no one really knew what this is all about. I was kind of the first test case, and I was like, "Hey guys, trust me, bro. Like, it did work great for me, and here's a little bit of proof of it." But they kind of just aped in. But now I think you have a cohort of true believers who are going to help those joining this next round. Who, and the new people may have be a little skittish and have to be scared and maybe asking questions. But you're going to have a group of individuals who kind of lived through that first round and say, "Hey guys, it's all good. It's going to work out. Like, they have a strategy. Just let them cook. We're going to get paid." We all got paid, guys. Everyone in Frontier Fund round one got a distribution, or they could decide. I mean, a lot of people rolled it over. I took a little distribution, rolled over the rest, but everyone got paid. It all worked out. So I think that kind of like initial anxiety was, oh, is it legit? Is it? It's all going to be fine. But now you have a group of individuals who can kind of be cheerleaders for that for the next group. So I'm looking forward to that. I guess question for you around where do you see this market going kind of in, let's just say, through the end of the year. Through the end of the year, you expect it just kind of grinding up, or are you expecting big volatility? Like, what are you seeing right now in the market, and where do you think it's going to go the next, say, three to 6 months?
Yeah, I'm going to share my take and then also how it affects the fund on that. I do think we're still have a lot of room to grow. I think Bitcoin is heading towards 150, 180, 200 is a real possibility going into 2026. And I think all the other assets are going to follow, right? Like Sol hasn't even broken its all-time high, partly because the market cap has increased with their supply over time. So I think Sol going into the 350, 400, 500 range is also a real possibility going into 2026. And ETH, For alt season to truly start, in my opinion, for those, I think a lot of the folks who are going to be interested in, generally what's going to happen with alts, each not only has to bring an all-time high, but it also has to establish dominance against Bitcoin, and that has not happened yet. So when those factors align, which I do believe we're starting to see indicators of that, with the mass inflows of ETF now starting to surpass on the ETH side over Bitcoin side. It has already happened multiple times in the past weeks. So I do think that those factors are starting to come into play. I am also starting to think that the 4-year cycle is not a thing anymore. That doesn't mean that there's not going to be a reset. I think the resets are going to be a lot smaller and the upticks are going to be a lot different as well. So whenever Bitcoin reaches that target in the next year or so of 150, 180, 200K and the other factors come into play, there will be a correction. And I think we can see Bitcoin coming back down to 100K from that high. I think we can even maybe see it come down to 70, 80, 90K. It'll be higher than the previous lows of the previous cycle, but then it will bounce back a lot quicker because of the ETF inflows. I think the ETFs are just going to buy that. The fund is very interesting because unlike your investments in pre-sale or a project where you invest and you're waiting for it to go up, with the fund, you're not waiting for that. You're waiting for volatility. So you're able to place bets on the long and short sides. When the market momentum is extremely bullish, our bets flip long. That doesn't mean we don't take any shorts. We take surefire shorts only. So this means that when there is a ridiculous amount of liquidity on the longs available, like we're talking billions of dollars of longs to eat up available, and the asset is extremely overbought, when those factors align and there is not any other bullish indicators, then we'll take a short-term short scalping position because we know that the exchanges they're not going to leave $1 billion on the table. What they're going to do is they're going to come after these long traders. They're going to liquidate them, free up that $1 billion in capital, and then they're going to buy that dip. So we bet on them doing that in a shorter scalp method. So this is the difference with the fund, with our trading methodology. Is like, we don't have to sit here and wait for our gains only to come when Bitcoin reaches 150K. We can have those gains all throughout this period. So this is my take. I think we're going up. I think there will be a correction. I think the 4-year cycle is going to be a lot more different. It's not a 4-year cycle anymore. And I think with the fund, you can take advantage of that volatility going up and down throughout this period. And I think we'll be able to do this well into 2026. And then our strategy is changing into other factors that are available.
Yeah, I think that's a question that people had. It's like, okay, the fund can do great and be relevant when the bull market is happening, but what about in the bear? And the thing is, if you don't believe Bitcoin and crypto is going anywhere, and it's a trademark in trading and in financial instruments now, it doesn't matter if it's a bullish time or bearish time, as long as the fund is trading properly, you can be on the long side or the short side. So the fund should continue to run. We'll just have to change its thesis a little bit and its trading strategy, I guess. But I am with you that I think the 4-year halving cycle can extend. And bull or bear doesn't matter as long as you have volatility in a market and liquidity, then the fund can continue to exist.
Yes, exactly.
Yeah, I mean, we've been on record on the show for a while now saying things have changed with the 4-year halving cycle. With all this institutional adoption, it seems like Bitcoin and maybe some of the majors are behaving more like traditional, stock market type assets. Yeah, there'll be drawdowns, there'll be corrections, there will be bear markets, but it may not be these 2-year long crypto winters. It may not have a blow off top, mania phase to the extent that we've seen in the past. So you kind of have to expect the unexpected and understand this space is evolving. So you and I and I think Nick, and we're all on the same page that the 4-year halving cycle, we may see some pullback towards the end of the year here in the beginning of 2026, but it may not transpire that way. So glad you guys are kind of on top of that. We're all thinking more or less along the same lines. Let's zoom out a bit. For the listeners here, where do you see Frontier Fund in, say, a year from now? Because people are like, all right, okay, I'm getting in now, but the power of it is the compounding. The real magic happens when you're putting it month over month and it's growing at 15, 20, 30% a month. So this does need to go on for a while. But then in my mind, there's that question of, okay, can they sustain this? Will there be burnout? Is this something they can just do? Because it's a lot. I mean, it's clearly a lot. So where do you see this in, say, a year from now?
Yeah, that's a great question. I think in terms of burnout, you'll notice even during the Pioneer round, there were certain days where we message, hey, we're going to turn off trading for a day or two. Because we realize that burnout is a very real thing. So we take those days to reset. Even during the Pioneer round, I think for 3 days I was at Lake Powell and we were not trading during that time frame. only during the hours that Asad could be awake, because you need that reset. If you're just on the screen constantly, your performance degrades. It's a very real thing. And that is the same reason why just recently Asad, who's the other trader, my partner in the fund, he just went to a different city, hung out with friends for a couple of days. I am leaving on the 31st to go to southern Utah, spend some time with family for 2 3 days. So we do these things in order to reset and to be able to come back and to be motivated and sharp, because we want to give our best performance to the fund and to everyone that is, putting their trust in us. So we manage our burnout in this way. And if we feel that we need to take a break from the fund, I think it will only happen in between rounds. We're very confident that we can do this. And I think, Amaru, you've seen me work for many, many years. I think you've seen how we've been able to perform regardless of different instances. So we're very confident in our ability to deliver in that regard. As far as what can the fund do long term, I think my ultimate vision for this fund is one that is going to continue to evolve, because there's so many opportunities with capital deployment and returns. But the key factors that come to mind and the target is for me, especially for those that are in the Pioneer round, there's a reason we called it the Pioneer round. And now the Trailblazers are coming in. I think these two round participants are probably going to be the biggest winners because of the compounding you mentioned. But I do think over time, my goal is that for a few of the participants to be at a place where the fund is kind of acting as a treasury that has helped them garner 10 BTC in their assets because of the gains that they've done. And then over time, hopefully there will be a few people that have, 50 or 100 BTC, not a lot, but very few. Now, how do we get there? That's not going to happen in 1 or 2 rounds. It's going to happen with the strategies that we're deploying over the next year. But then after that, I want you to take a picture here and imagine for a second when BTC was 20K. And if we had the capital we had right now, and if we just had that BTC and then we held on to it with the fund strategy that we're playing right now with a little bit long-term hold. And the thing is that we've been through enough cycles to know this. And you'll remember in the past couple of years, I've been talking about this same implementation in other aspects where we work together as well. So this is going to turn into a treasury where people who are involved right now are going to be at a place where they're not looking at just smaller gains. They're just going to end up, oh, I have quite a bit of BTC stacked up now. And I just want to hold on to that and kind of use this as a treasury that grows and just pays them a return over time. And then when the market goes down, we just scoop up a bunch of BTC because we've got that capital that we've built up. The game with the fund is to build up enough capital that when that dip happens, we just scoop a bunch up and we're able to liquidate very little bit of it through trading to generate yields to pay our living costs. And then we just coming into the next uptake, which is not going to be a 4-year cycle, with a very heavy treasury of BTC and SOL and other assets. So this is what the fund is going to turn into. And of course, the people in the earlier rounds with the capital that they add, if you add more capital, it will compound faster. If you have less capital, it'll take a little bit longer to compound. They're going to benefit from it the most. I hope all that makes sense. But it's typically the route you see all these treasury companies going in, and the fund is giving everyone an opportunity that wants in the crypto paradise sphere the same opportunity to participate.
Yeah, I think the name of the game with Frontier Fund, and maybe just like any other investment, you got to think long term. You have to think like this. You're going to be in this for 12 months, 24 months. And at that point, your life will absolutely be changed. Do a little exercise with ChatGPT. Ask yourself, with my $10,000 initial investment, 15% returns a month. And by the way, I'll have the next question is going to be about the fees. What am I going to have in 24 months? The number is going to be enormous. The number is going to be life changing for you. But the problem becomes if you start just pulling it out and I'm giving up after 2-3 months because whatever, you're not going to see the magic. The magic won't happen for you. But the big thing, of course, is just getting Brown Cowboys assurances that they're looking to continue this for multiple years, which sounds like that's the case. So it's all about long term. It's all about compounding when it comes to Frontier Fund. I do want to talk about the fee structure because it's a bit unusual. I guess normally a fee structure for a similar type quote hedge fund would be, I think it's 20 and 20, if I'm not mistaken, like 20% fee on your principal and 20% fee on your profits. Tell us about the Frontier Fund fee structure. What is it? Why are you doing it differently than maybe the traditional route?
Yeah, so I actually had some interactions with funds in the past that were managing some of my own capital. And my frustration was exactly what you just described. I mean, they do a good job. I'm not here to bash every single fund. They have operating costs and everything. But my frustration was the hidden fees, the add-on fees, and you're just like, man, what the heck? Like I thought I was making this return, I end up making this return. So what happens is you have a principal fee, you have a profit generation fee, and then you have a volume fee. So there's money that's being made regardless. Like every trade, there's money being made. So when you get your capital out, you're quite disappointed because you're like, this is very different from my expectation. With the Frontier Fund, what we've done is that we've placed all our bets on performance. So we don't charge, for example, we paid, I think just in the first couple of weeks, $43,000 in platform fees to Hyperliquid. We did not charge that to anyone, right? So how that's built in is in a very simple manner. We charge a fee on profit only. So whatever profit we generate, we take 50% of that profit because of all the work that went into generate that profit, and you take 50% of that profit. Split in the middle, no additional fees. We're not going to be saying, oh, now you have to pay the platform fee for Hyperliquid. You have to pay the fee for all the tools, the salaries, all this like other crap that gets added on, operational costs, admin costs, none of that. So your calculation for calculating a return is very, very simple. Oh, did they 3x the capital? Great. That means that my capital is doubled because that's what the math adds up to, right? So you just take the profit that is generated, cut it in half is yours, half is ours. It has two key benefits. One, a simple fee structure. And second, our interest is directly aligned with your interests. We are motivated to perform and generate as much profit as possible so that we can earn more. And when we earn more, we are able to then deploy that to other capital strategies that will help long term. For example, I mentioned the yield generation strategy with the treasury, with the BTC and SOL treasuries. There's other aspects that are going to be outside of crypto relating to real estate lending, real estate yield generation that will also become available to participants in the future years when the crypto market is going to slow down a little. And all of that is coming from our fees being generated and then generating those opportunities and capital opportunities to provide to folks as well. So it's a very simple structure with a lot of upside. Anybody can do it on napkin math. And it's working out good. A lot of people had a question about it in the beginning, but once they see the amount of work and the returns they're getting, I think it's making a lot of sense. I think we'll keep that up.
Yeah, that's how I looked at it too, right? Like, yeah, on its face, it's high, but if you compare it to the traditional structure, it's really not that much higher. And it means the interests are aligned. If you see the amount of work that goes into executing these trades on a day to day basis, you understand, all right, this is not something you just do on a part-time basis. Like this is round the clock, literally 24/7 at times, other than when they're taking breaks. So I got no issues with the fee structure. To me, the key is long-term compounding month over month. I'm very pleased to hear there's perhaps some opportunities down the line in 12, 24 months from now to sort of diversify perhaps. I think that's a smart move because once you have $1 million, it's a little bit, you have to kind of approach the manager of that capital perhaps a little differently than if it's $5,000. So I'm glad to hear you're thinking in those terms as well. Nick, any final questions or thoughts? Maybe let's remind folks on how to get involved with round 2 of this thing.
Yeah, no other questions or thoughts. 44 minutes really just talking about Frontier Fund. It is good to hop on this video, even for me, because I didn't know the timeline, I didn't know the criteria. So now it is good to have those. And of course, we're going to snip that little segment out and get that blasted everywhere in both the public and private channels of Crypto Paradise, Learn Crypto, and elsewhere. And, get your 400,000 surf now. You have a couple days to probably do it to be eligible to contribute to the next round of the Frontier Fund. And I expect the results to continue. Now, there's nothing guaranteed in life. There's nothing guaranteed in trading. But now there's been months and months of historical data, ups and downs, and the average there is quite solid and something that I think is good for anybody's portfolio. Whether you're going to compound it, whether you're going to use that as monthly income, that's totally up to you. Either way works, but those kind of returns can't really be found anywhere else.
Yeah, exactly. And I think one thing people should know is that the more we grow our capital, the lower the risk becomes for everyone. As an example, in $1 million, with $1 million of capital, if we deploy roughly about $500,000 of it, and let's say we acquire 10,000 SOL, every dollar movement is $10,000 in yield generated. So only $2 movement in SOL price would return a 2% yield. So what this means is that the reason we keep growing the capital and the reason we keep redeploying the capital is that we need to use less of the capital to generate more yield, and we're more yield efficient for each person with lower risk profile. So the folks that are in the Pioneer round were true pioneers. They dealt with a high risk profile. Coming into Trailblazer round, you have a little bit lower risk profile, but now the Pioneer round folks have a benefit because they have already generated tons of yield that they're putting into this next round. The Trailblazers coming in now, the more capital that we put in here, the lower risk it will be for everyone because we utilize less of it, keep a lot more of it in margin, and then we're able to generate a higher yield. So I can't wait to welcome all of you to the frontier. And this has been a great conversation with both of you guys. It's always a pleasure to be here. And I can't wait to see you all on Paradise Island somewhere in the very near future, enjoying our Frontier
Yeah,
Fun
that's our
games.
tagline. You almost got it right. You almost got it right. But yeah, look, you sit in Frontier Fun for 12 months. Maybe you will be able to buy yourself a villa down somewhere where it's sunshine year round. So great to have you on the show. Great to hear from you. Please do, for anyone who's been watching this, remember to like, share, subscribe, grab your 400,000, serve. This is the opportunity. You don't encounter opportunities like this too often. So I don't want to say opportunity of a lifetime. That maybe is a bit hyperbolic, but this is a special one, guys. So don't fade it. Thanks for your time, Brown Cowboy. And until next time, guys, we're going to see you on the beach.
See you on the beach.
Crypto is on the rise, making that